Nearly 1 million US jobs just vanished. Not from layoffs, but because the government admits they actually never existed. The US Department of Labor just revised 911,000 jobs, the largest correction on record in history. In this video, I'm going to break down what it means for politics, the recession, and for the Fed's next move when it comes to rate cuts. You see, the Bureau of Labor Statistics, or BLS, the principal fact-finding agency that measures the labor market, just revised 911,000 jobs, almost 1 million jobs, out of 12 months of already reported data. This equates to about 76,000 overstated jobs per month. This is the largest revision ever, flipping the 824,000 revision from 2009 during the global financial crisis. Now, this changes the average job gains from 147,000 per month to just 71,000 per month, which is more than 50% decrease. That is a problem. Now, the industries that were hit the biggest were hospitality, negative 176,000, wholesale, trade, negative 110,000, and retail with a negative 126,000. Now, does this come as a surprise? And the short answer is not really. US Treasury Secretary Scott Bessent has already warned the BLS job data would show a massive downward revision during his interview on NBC last week. Now, probably even they didn't expect this big of a revision, but back in August, Goldman Sachs had an estimate for 505,000 to 950,000 job revision, which even then was substantial. So what does this all mean and why is this even relevant? First, it just means that there was no job creation in the last year of the Biden administration. This data was used by Biden during the campaign to make the economy look good, which will boost Kamala's chances of winning. And now that Trump won, it is being used to paint an image that Trump is the reason for the bad economy. Second, with the Trump firing of the BLS commissioner last month, he was criticized a lot for doing it because he didn't like the job numbers. Now we see that the biggest revision in history was under Biden's term. If you think Trump is evil, well, I don't know what to tell you, think again. Another reason why you should care is because of the recession. According to Bloomberg's chief economist, this massive revision only confirmed that the recession started April 2024. Another shocking data is that for the first time since the COVID pandemic, there are now more unemployed people than job openings in the United States. I mean, if that doesn't ring a bell, I don't know what will. But lastly, and most importantly, is the FOMC and the potential rate cuts that are happening next week. We've been debating whether it's gonna be 25 or 50 basis point, 25, which is at this stage is basically guaranteed, but a potential 50 basis point could come, because if the Fed only knew how bad labor market was, it would have cut 25 basis point in March and potentially another one in July, which now justifies cutting a 50 basis point in September. I've been saying this for a long time. Jerome Powell's two main thing was why not cutting rates is inflation from the tariffs, which is clearly not there, and two, the labor market being so strong. Well, it's not that strong after all. And more and more people talk about 50 basis point rate cut next week as a potential reality coming out of the FOMC. Standard Chartered, for example, is expecting a 50 basis point rate cut coming out openly, and Security Bessent is pushing the Fed to increase the rate cut by a lot. Now, how is the market pricing in a 50 basis point cut? Surprisingly, it's only around 8% probability at this stage, which I don't understand why, according to CME, but poly market is already at above 14%, which is substantial if you ask me. Obviously, this is new news, but considering the fact that almost 1 million jobs are raised, unemployment higher than job openings, and the Fed is completely under pressure to cut deeper, we're up for a great New York opening. And again, don't forget that this is the perfect setup for a potential Bitcoin breakout. I'm guiding you through the market, giving you trades, market moving news every single day in a short consumable form. If there's something that you need, check out this video, which is today's update. You can see what I think about the market and where the chart can go. Subscribe to the channel, smash the like, and come back for another one tomorrow. I'll see you in the next one.